What's up, everybody? Welcome back. Happy Friday. Today is a rather regular day here in the crypto space. Thank you for joining us. And if you're tuned in today, smash that like button for me. Hit subscribe. Please help hype up the stream. It helps YouTube show this to new people, broaden our audience, get more viewers into the fam. Let's go. It's Friday, and man, what is there to talk about? If you notice the thumbnail and title, last time this happened, the bottom was in, which is true. This is not clickbait. This is really the only thing I think there is to focus on. Price action in crypto over the last, 3 weeks, 4 weeks has been pretty sideways. We've done a slow grind up to the right, not a lot of change, not a lot to report on. So let's get into the chart nerd. Let's kind of delve into this chart nerd side of this channel that we love. That's why you tune in. You guys love it. I see you, Pickle. You love it. Jeremiah loves it. Randy loves it. What's up, Decrypt? So let's bang out this beginning, and then we'll talk. We'll just get into the wing it, whatever. So basically, we are coming up on another Bitcoin DeathCross, which is my super villain name. If I was a super villain, I would be DeathCross. We decided that many moons ago here. On the horizon looms something with a very spooky name, but doesn't usually live up to that. I don't think it's really warranted the name DeathCross. So what is one? Let's start there. A DeathCross is officially the 50 daily moving average, crossing from above down below the 200-day moving average. So in front of us, we see that happen right here. The green being the 200, the yellow being the 50. And we can see it's above and it falls below. In textbook analysis, this is considered a bearish signal. Makes sense, as a shorter average of price is slowly or even quickly at times falling below a longer average of price. That does not usually signal an uptrend, but Bitcoin, a little bit different. Doesn't seem to really play out quite the same way. We're going to take a look at what has happened in the last few, what we might expect, and let's lock in here. So really quick, guys, after this live stream, it is Friday. If you go to joincrowncrypto.com, we have a new premium group. This is here to help you learn, help you upgrade your trade. We're going to be doing small session Q&A after this live here in the private Discord. Check it out. You can get a free week trial. If you use code VIP, you'll get 50% off for life. And I mean, look at that, 5-star reviews. Anyway, joincrowncrypto.com. Check it out. There's my short show. People erroneously at times will call death crosses really just any shorter moving average crossing down underneath a longer moving average. And in their defense, though they're probably not aware of this, they're not really, they're wrong technically, because a death cross is a defined thing. It is the 50 and 200. However, we can call those other crosses maybe bearish crosses. I think that is accurate, and probably honestly a better indicator than death crosses. So oftentimes you'll see almost any two moving averages crossing called a death cross. That is not right. A death cross is just the 50 and 200. We have bullish and bearish crosses, and honestly, it does not matter what the moving averages are. We just tend to pay attention to the 50 and 200 day. That's really all the sauce. There's nothing more to it. There's no magic. There's no this happens and then price has to do something. What we can do, though, is go back and look at the last few times this happened, and maybe it can give us a guide or at least something to gauge the price action that sits ahead of us. So first and foremost, actually, let's start with the one that's upcoming, because you'll notice here that the 50 still remains above the 200. So what that means is right now, we do not have the death cross. The death cross has not happened. Unfortunately, due to, I'll say, the consolidation or distribution of price here around the same levels, the likelihood of these two moving averages crossing bearishly is close to 100. I want to say it's not even worth pointing out, really, but if price were to rally above the all-time high, maybe blast to 120, 130K in like 2 days, and then remain there, maybe climb higher, this death cross may not happen. In that case, the 50 could, in theory, be pulled up and really avoid that 200, but that is really an outlier. I don't think that's something we should even really entertain here when we're talking about the death cross. At this point, these are all but locked and loaded. They're all but ready to go here. And if we do this little kind of trick, which I've invented, to try to forecast out when these will happen, this has been, honestly, it's been mixed results, but it usually gives us like a good kind of time frame to aim for. Basically just projecting out the trajectories of those two moving averages, we get roughly, we'll say April 6th, April 7th. So maybe just at the end of the first week of April into the start of the second week of April, we can really expect these to move. Now, if Bitcoin does the opposite, which we could see happen, and dump even lower than it has, that cross will speed up. Almost any trading under 77K is going to speed this death cross up. Pretty much any of this range here from 90-ish to 80 going to put us on track at that 7th of April for the death cross. So let's accept that this is just coming. It's coming, but it's not the end of the world. In fact, we have seen this happen so many times in Bitcoin. We've gotten excited for death crosses and golden crosses, and been disappointed in both directions, honestly, on this channel for many years. Sometimes they played out, sometimes they haven't. I don't think they're very good hit rates, but let's go back to the start of this bull run. The start of this bull run began basically with a golden cross. As you can see, this golden cross in February of 23 was a little late to the party. Price had rallied from 16 all the way to 24, and almost exactly on this golden cross, the opposite of the death cross, price began falling. Price began falling towards it. Typically, the farther away we are from these big moving average crosses, the more likely we view it to be that price will kind of seek out that level. And we can see that did actually happen back here in 23. It did take about a month in March. It went all the way to the 200, but that's right at that golden cross. You can see here that that was not really the most bullish thing. Yes, afterwards we did get a higher high in the structure, but it was not a guarantee. You know, this was by no means guaranteed. If you had longed immediately on the golden cross, you would have gotten absolutely destroyed. Probably then to just watch it go higher, maybe you long again thinking you're right and you got wrecked again. So the first example of these 50 and 200s crossing in this bull run were not great trading signals, to be honest. Outside of this was a signal of a greater trend change, or a greater or trend continuation. I'll say a trend change from bearish to bullish. It wasn't really actionable, but it did say, okay, we have seen this big time frames average price slowly change and slowly morph into a bullish trend from a bearish one. That's about all we can take from this first example. Moving on, we finally get our first death cross in September of 2023. Something that's interesting and different from the one we're seeing here coming up in April is price actually fell below, at least for now it's different. Price fell below the point where they crossed. It fell below the 200 and the 50 and traded sideways. This resulted in a rather bullish explosion out of, a little heartburny, a rather bullish explosion out of this sideways consolidation. You can see right here our first example of a death cross. Actually, this is why it's not clickbait. This is why the thumbnail and title are spot on. They ain't bullshitting you guys. This is real. This marked the bottom in September of 2023 to the candle. Let's put this on the chart here for those of you who are vision impaired. To the candle. On the death cross, we had a break of the range low. People got very bearish. It was perfectly timed with the death cross, but you can see that was it. That was the bottom. Done. After that, we only went up, setting higher highs and higher lows, finding resistance at the 200, support at the 50 before taking off. And if that wasn't enough to convince you here, maybe not that you need to go long or something on this death cross, but that these death crosses don't live up to their name. That's my real point here. We'll go to the next one. I actually, jumping ahead, bullish cross, or the golden cross here in October, actually played out well. Price was far from the cross, but it did not seem to slow down. But that's not what we're on about today. We're on about these death crosses. So let's go to the next and most recent death cross before the upcoming one. And that is right here in August of last summer. A lot of you probably remember this price action. Bitcoin had hit an all-time high in March. Things were different this time. Very exciting, very spicy. And then we spent 6 months going sideways. If you look at the timing to the death cross in 2014, so just to update you, for those of you tuning in, we had one in 2023. The day it happened was the exact bottom. We have one in 2024, the year again, in August. And what happened on this one? This is where I think I can really make the argument that these don't live up to their name. Price bottomed out in August, early August. 5 days later, we had the death cross. Watch the response to price. Price rallied to that death cross. Definitely dicked us around for a while. This was not all sunshine and rainbows or anything. But then began an uptrend. Lower high, higher low, higher high, and you guys know what happened. So we see in the last 2 iterations, and I think what's important, because we could go back and look at every death cross ever, and we could draw conclusions, and we could spend years and years and years studying and wasting time on this. But these are the most recent, and they are the death crosses that have happened in this upward trend or in this bull market. So these are, in my opinion, the most relevant, or at least maybe the most relevant to what's about to happen in April. We saw the exact bottom in 2023. In 2024, the exact bottom came a little bit before. And here we are now in 2025. It seems, at least in this bull run so far, we have one of these a year. They have marked the bottom over the last 2 years. And here we go. We have one upcoming. So again, this is not to convince you to go long. This is not to convince you, because you can see the price action was not favorable, especially last year. This was not favorable to just go long on it, right? Not at all. You would have gotten chopped to heck. But this is to convince you, or at least present the idea that this does not live up to its name. Maybe, and we're not going to do this today. We've done this before. We'll do it again in the future. But maybe in a bull run or in a bullish trend, death crosses are weakened or hindered or don't live up to their name. And we see the corresponding golden or bullish crosses living up to their name, right? Because we can see here in October of 24, we got the golden cross, boom. And remember, if you want a golden cross, you have to have a death cross first. You can't have one without the other. We saw this rally the year before. We saw the exact same thing, led to a rally. So maybe in a bullish trend, golden crosses are more to be paid attention to, and bearish crosses are more to be ignored, and then vice versa in a bearish trend, because I almost guarantee we go back here. We look at these death crosses from like January of 22. We didn't really know it at the time, but the bear market had started. That death cross played out extremely well. Well, you would have gotten stopped out again, kind of driving home. These usually are not, you see them, you take a position, because that doesn't seem to have a good history here. But you can see this death cross happened in January of 22. You still would have gotten stopped out before dropping lower, but the trend was bearish. So maybe we can draw this conclusion. I propose this. If we see this death cross play out and meaningfully push price down, so we don't see something like 2023, we don't see something like 2024 where we have a low and then we're quickly bought up and maybe we spend a few more months doing nothing, but we don't trade lower, right? That's kind of the jam here. We didn't trade lower in 23 than the day of the death cross. We didn't trade lower in 24 than the low before the death cross. Fair enough. As long as we hold these lows at the cross, perhaps we can say that is validation for a bull market. And if we don't see that happen, if we see selling that does take us to new lows post death cross, maybe we have to re-examine our bull market. Maybe we are entering a different phase. This is just something as traders we need to confront and we need to be aware of. This is not telling the future. I'm not predicting this is happening or not happening, but it's something we just need to have on our radar. How are these big time frame crosses playing out with price, and does that give us a good idea of where the trend is at? Boom. That was pretty good. That was pretty good, I think. I'm proud of myself. Let's do a little update here. So on Monday, I know I was gone. I missed you guys too on Wednesday. I had a family member I had some health stuff I had to help them with. On Monday, we got a nice little pop. It was Monday, right? It was Monday. We got a nice little pop. We did stream. And I remember saying, guys, let's celebrate. Let's enjoy this green because it has been a long time since we've had any kind of higher high, any kind of green, anything to celebrate here. Let's celebrate. Let's feel good, but let's not get ahead of ourselves. Looking at total crypto market cap, where were we on Monday? This riddled the stream right here at the top of this descending channel. I said, as great as this feels, and let's enjoy it, but let's not actually do anything about it today. Price rejected exactly from the top of this channel on total. Exactly. I wish it hadn't. I wish it would have continued higher, but it did. I don't know. I don't want to say exactly as predicted, but something, right? Something. This channel just validated again. 1, 2, 3, 4 touches to the top. 1, 2, 3 touches to the bottom. Here is the hopium. The hopium on this chart is that we find a higher low. That higher low, you can see today, we've had actually a pretty impulsive move to the downside, almost 5% down from the total crypto market cap, bringing us to 2.68 trillion, which is, I believe, like it's the monthly close or something here in March. Major previous resistance, big candle right to that previous resistance. Maybe it's right here. That's a little hopium for sure, but maybe the higher low is here. Whoa, highlighter. I don't think I've ever used the highlighter tool in all the years of TradingView. Maybe the higher low is right here. Maybe the higher low brings us a little lower, right? Or maybe we don't get a higher low and maybe return to the bottom of this channel, marking a 4th consecutive hit to the bottom of this descending parallel channel on total. Either way, I do expect this to eventually break to the upside. I'll say the more touches to the bottom, the less confident I am that that rally brings us anywhere. But at the moment, this could still actually play out pretty well. Despite it really killing all of the dreams and hopes and fun that we had on Monday, our retracement's pretty shallow. We can really come down to almost exactly where I pointed, still just hit a golden fib pocket and look to trade higher, right? All we need to break out of this pattern, and we do expect it to happen eventually, as we have this falling pattern, is a higher low. I would like to, just for the sake of this, we'll use here. Let's say the low is in, and we bounce, probably looking for some kind of price action like that. Can see a back test of the falling trend, moving up to that 3 trillion, the previous all-time high from 2021. And, I don't know, do a nice little retrace, right? Nice little retrace, nice feel-good move. I don't love that the 0.5 retracement from the all-time high sits right there at the previous all-time high. That's kind of spooky. I'll say that does point to liquidity being there. We did have that liquidity swept early March. Maybe not. Maybe not the play for right now. I can see this happening. I don't love that the 0.5s there actually. What we can really say is if we trade above 3.2 trillion, things are looking much better here, but we still need to be aware of that lower high potential. The last thing we want to see here is a rejected lower high into a lower low, and then we begin a long-term downtrend. I'm really not trying to have a bearish tone today. It's just that the charts have and still do kind of have a bearish vibe to them. We haven't seen too much progress. We did on Monday get our first higher high, and that just got slapped back down. It is actually not in bad condition. You can see we're right here back to the previous Friday, which is almost too convenient. What a coincidence. Back to the literally a week ago where we were after putting in a higher high. That's some bullish progress if this low holds. Where were we? Last things, CME gap filled. We've been following these on Monday. We put this down here, and today, it's funny, we didn't go live Wednesday. Nothing happened. Here we are, Friday. CME gap filled. So let's update our CME chart here. No more gap here. Where do we even have gaps anymore? There are no gaps close to price. On Monday's open or Sunday night when CME opens and begins trading again, we will likely have a new gap. Whether that will be above us or below us, we'll find out over the weekend. But at this point, we are very much removed from these gaps. I know a lot of you have started using them to trade kind of intra-week, but man, look at this. There is no gap above price. The closest downward gap is almost 30% down, sitting at 60K. I'm not here to tell you what to think. Draw your own conclusions, but we're kind of just floating up here now. Not a lot going on. We have no signals from CME. I do want to see one thing on CME. I want to see where its DeathCross is at. Hold up. I don't know why I did it this way. That's silly. Let's do it this way. All right. This is pretty much my last kind of homework thing, and then I'm going to turn to the chat here and see what you guys are doing. So CME, one thing that's interesting, actually two things that are interesting on CME. Remember, CME is really, it's a little removed from Bitcoin's price. It trades a little bit higher, a little bit of a premium, but the biggest difference is it's not spot and it doesn't trade over the weekends. So really this is a chart that mostly just removes the weekend trading from Bitcoin. And I don't know, I have no idea how to even begin to tackle this. And I'm just seeing this for the first time now. This has a very different history over this bull run. And maybe this could be actually tradable. Maybe this could be actionable versus the spot moving averages. Look at the two examples that we had in this bull run here, the 50 and the 200 daily. We did not get a DeathCross or a golden cross here in October. We had a, what I like to call a bullish kissing, when they are about to cross, but then price changes really rapidly in one direction or the other, and it kind of cancels it out and makes it not happen. Unlike spot, CME did not have a death or golden cross in October of 23. And again, this is kind of wild. I don't know how to interpret this. Maybe Bitcoin is just more bullish if you don't count the weekends. I don't know. But, and then again, in 2024. Now, what's really interesting also is that the cross on spot happened right here in August. We didn't even see this kissing or this near miss until October. That's 2 months plus delayed, but that again did not DeathCross nor golden cross here. Here we are. So just viewing CME in a bubble, what would we expect to see the same thing happen? Well, we'd expect the 20 or the 50 to slowly come down as the 200 slowly comes up, and to see them miss, right? Maybe if we see on CME the 50 cross with the 200, maybe that is a greater trend bearish signal, because we haven't seen it so far. That's kind of interesting. What do you guys think of that? That's actually kind of cool. So far, CME might be suggesting that down here in the 78-79 zone might be a solid buy, as price did seem to bounce this 200 quite a few times last year. And quite 1, 2, 3. Wow. Whoa. Now we're getting into like conspiracy territory here. All right. These actually didn't touch, to be fair, but let's just 1, 2, 3 and up. 1, 2, 3. Follow me. 1, 2, 3 and up. Yeah, we traded below, but that's still like 3 touches and up. 1, 2, 3 and up? Question mark. That is not bad. That is actually not bad at all. That's not terrible. I actually kind of like that.